I'm surprised somewhat, I don't know why, to learn that you have a new position in Tesla. Can you tell me why you decided to buy that stock?
In this video, yet another Tesla bear has flipped, come out of his cave and gone long Tesla stock after finally seeing the light. Better late than never. Although if we fast forward a decade or so, I think many people will be referring to him as an early Tesla stock investor. Yet, not everyone has learned their lesson. We'll also look at a truly hilarious article from a Tesla bear who thinks the stock could go to $100 per share because, well, you'll just have to wait and see. And before we get into it, if you want to instantly unlock over 100 exclusive videos, plus my 10-year Tesla stock price targets and loads of other perks, including optional access to my Tesla valuation model, join our growing community of thousands of supporters on Patreon with the link in the pinned comment. You can also pick up some Tesla, Elon, and investment-themed merch in the merch store. So here's a prediction. Every single Tesla bear, every single Tesla short seller, all of them, without exception, will either flip and become a Tesla bull or go bankrupt. It's just a matter of how long it takes. There's something fascinating about human psychology. Even extremely intelligent people can believe truly ridiculous things and fail to re-examine their assumptions for years, sometimes decades, sometimes never. There are many extremely intelligent people that I personally know who've still yet to examine some of the absolutely absurd beliefs they inherited in their childhood through indoctrination. I'll just leave it at that. The point is, don't know what it is, but sometimes very smart people can believe very dumb things for a very long time. So I think it's always cause for celebration when somebody finally wakes the fuck up.
I'm surprised somewhat, I don't know why, to learn that you have a new position in Tesla. Can you tell me why you decided to buy that stock?
Well, as you know, Scott, we've covered energy storage, we've owned battery companies, we've covered Tesla for a long time, and frankly, I was negative on Tesla in 2019, 2020, worried that the business was undercapitalized, worried that they might go bankrupt. And
just a couple of quick observations there. As a student of human psychology, did you note the emotive terms there? Worried, fear, okay? Fear-driven decision-making. Now, I understand why. If you're surrounded by a bunch of 150, 175 IQ geniuses who all think Tesla's going bankrupt, you live in a bubble of geniuses who are never wrong about anything and they're all telling you the company's going bankrupt, it's very easy to fall into the same line of thinking without actually doing any of your own thinking, that is. Case in point. The idea that Tesla was going bankrupt is truly absurd. Now, let's unpack this. I can't believe I said let's unpack this. What am I, some wanker in a corporate boardroom trying to impress people at a meeting? But we do need to discuss this in more detail. Yes, it is true that in theory, there are many instances in Tesla's history in which the company could have theoretically gone bankrupt if they ran out of money. And two, and this is the really important part, the whole they weren't going bankrupt, you fucking idiots. If two, they decided not to do anything about it. This is very important to understand. See, you can't just look at a company and look at their last quarterly loss and the quarter before that and look into the future and go, they're going to lose the exact same amount of money. How much money do they have available? That's only enough money to get them 3 quarters into the future. They're definitely going bankrupt. You have to think a little bit deeper. Well, hang on. If that actually happens, what can they do about this? I don't know, maybe raise more capital? Duh. I mean, there's footage of Elon back in like 99, 2000. No shit, go fact check me. Talking about the PayPal sale, discussing the fact that raising capital is a matter of making a few phone calls. In 2000, do you really think, almost 20 years later, Elon Musk, having built his reputation, absolute business genius, engineering genius, incredible leader, doing the impossible repeatedly, do you really think if Tesla was getting a little bit short on cash in 2019, okay? We're not talking about 2008 during the global financial crisis where they were struggling to ramp up their first pseudo-prototype vehicle, the Tesla Lotus, aka Roadster. We're talking about 2019. Do you really think there's a situation in which in 2019, Tesla's getting a little bit short on money and Elon can't make a few phone calls and go, you know what, let's raise some more capital, dilute our shareholders, we got to do this to survive. Do you really think Elon didn't have a bunch of buddies with many, many, many billions of dollars that he didn't talk to and say, hey guys, worst case scenario, you're interested in buying Tesla if we need to, or taking a position in the company so I can keep, okay? You have to think like this. You can't just go, they're going to run out of money, I don't need to think anymore. Because the whole not thinking anymore part is what led people to think the company had a credible chance of going bankrupt. I want to underscore, early in Tesla's history, the risk of bankruptcy was much higher because they hadn't established themselves. They didn't have compelling technology. They didn't have a track record. They weren't a publicly traded company until 2010. For Tesla to raise more money back then, very difficult. But after releasing the Model S and winning every fucking award ever, best car ever, literally ever, the performance was insane. Everything was insane. Customers loved these things. At that point in time, you've got to have a compelling product that's showing incredible promise. I mean, it was obvious 10 years ago that Tesla had won the decade and the next one. It was obvious at that point in time. They were still struggling with some things. Don't get me wrong. But at that point in time, the probability of Tesla going bankrupt, vanishingly small. Yet most of the bears just assumed, no, they don't have a lot of money. They're not making big profits yet. They must be going bankrupt. And this is the whole point about extremely intelligent people believing extremely dumb things. If you ask any intelligent, longer-term Tesla bull, do you think there was a high probability or any probability of Tesla going bankrupt in 2018, 2019, 2020, 2021? They'll go, no, because they could have raised capital or this, that, or the other. This is very important to understand. Again, going back to these comments, I was worried about. Well, if you're worried about something, instead of letting your emotions cloud your judgment, actually think your way to the bottom of where this worry is coming from and determine, is it legitimate or not? Of course, actions speak louder than words, so if you'd like to fact check me, in 2019 and 2020, when our good friend here was worried that Tesla wasn't well capitalized and worried that they had a legitimate chance of going bankrupt, I was making videos on YouTube trying to explain to people that despite all the FUD they were hearing non-stop in the media everywhere, Tesla's going bankrupt, the competition is coming. It wasn't the case. People were being deceived. I was trying to get through the noise. This is important to understand. Feel free to go watch some of the videos that I posted in 2019 or 2020 discussing Tesla, everything. I'm willing to bet Brad had not yet seen my channel and probably still hasn't, and I'm not suggesting that he should be watching YouTube either, but the point is, there was a gaping chasm between the perception about Tesla and the reality. And if you allow other people to influence your thinking, to install their beliefs in your brain without actually doing any of your own thinking, you can be on the wrong side of that chasm. Just for example's sake, back in 2019, when the vast majority of very smart investors thought Tesla was credibly going bankrupt, I was buying Tesla stock for, well, let's have a look now. These are all split adjusted. $18, $17, $17, $17, $17, $16, $15, $13, $12, $12. Remember when I was talking about that gaping chasm between perception and reality? The gap? Opportunity. Case in point. Buying Tesla stock for $15, $16, $17, $18 a share back in 2019.
And Elon himself has gone on Rogan and other places and said, you were good to be worried because we were almost bankrupt multiple times.
This comment is often brought up to justify why people were short and bearish on Tesla stock. It's absurd. Elon's point, if understood, is that automotive companies bleed money. At any moment, there's a chance of them completely dying. One problem can entirely kill the company. But you have to understand, when Elon makes these comments, it's to emphasize how excruciatingly difficult it is getting to volume production without dying. Not to suggest there was a legitimate chance of Tesla actually going bankrupt in this universe. Again, we have to understand, when Elon makes these comments, he's explaining Tesla had an insane cash burn rate. If they didn't solve these problems, they could have gone bankrupt if they didn't take action to not go bankrupt. Again, like raising more capital. Elon tells these stories to emphasize how excruciatingly difficult it is to get to volume production. You can't take these comments wholesale without thinking about them. When I was 25 years old, I almost went bankrupt. I just bought my first apartment, had a brand new mortgage, had invested almost all of my savings, didn't have much available, and then got fired from my job for spitting facts. Now, I could tell this story, I almost went bankrupt, or I could say, but as soon as that happened, I went, got to solve this problem, took on a ton of freelance work, applied for a bunch of jobs, went to 2 interviews, literally got accepted for both jobs at both interviews immediately, problem solved. So yeah, I can tell that story as if I nearly went bankrupt too. I'll go, I lost a job just after I took on a mortgage when I'd invested most of my savings in the deposit for the piece of real estate. Oh, it's a scary story. I nearly went bankrupt. Except I didn't, and there was no chance I was going bankrupt because I'm obviously going to get another job. Problem solved. Think of an automotive company like a human. A newborn infant is completely fucking useless. It's pissing itself, it's shitting itself, it's crying constantly. You have to focus 24/7 on just keeping this thing alive. In these early stages, where companies like Rivian and Lucid are today, the risk of bankruptcy is extraordinarily high. But eventually, a newborn infant becomes a toddler, then a young child, then a teenager, then a capable adult. Tesla's around 20 years old now. As a teenager, Tesla the company wasn't in any reasonable chance of actually going bankrupt. The same cannot be said for EV startups today, who are in their infancy. Of course, I don't think I'll ever get through to these folks who were bearish on Tesla a couple of years ago. In 2019, well look, Elon said they were going bankrupt, so obviously I was right. Let me give you a scenario in which Tesla could credibly have been going bankrupt, legitimately had a high probability of going bankrupt in, say, 2019 or 2020. Model 3 ramp, production hell, absolute fucking nightmare. Tesla can't solve problems. They have to go to the market. They raise another $5 billion. They dilute shareholders. Everyone gets pissed. The stock tanks. Oh my God, what's going on? This is terrible. Then 2 quarters later, Tesla raises another $5 billion. Now the market's getting concerned. Oh, maybe they're going bankrupt. A couple of quarters later, they raise another $5 billion. They still haven't solved Model 3 ramp. Yeah, now they got a problem. Now you could credibly say they might be going bankrupt. But we were nowhere near that stage. It just kills me that anyone thought there was a credible chance of Tesla going bankrupt in 2019 or 2020. This idea is farcical. Imagine telling people that you nearly died skydiving once. Oh my God, what happened? Well, I jumped out of a plane without a parachute being open. So what happened? Well, I was falling toward the earth, terminal velocity, really fast, could have died. And then I pulled my parachute and it opened and then I didn't die. See, I nearly died when I was skydiving. Yeah, I mean, I guess technically you could say that maybe it was a possibility. If your chute didn't open, if you didn't have a parachute in the first place, yeah, maybe a problem. But Tesla had about 20 backup parachutes available in 2019 and 2020. Okay, I've labored the point. I really need to get this off my chest. Let's move on.
But fast forward 2 years, the world has changed dramatically. Not only has their capitalization changed, right? Bankruptcy is totally off the table. But two things have dramatically changed. Number one, the world is moving now wholesale, both for geopolitical realities and for energy realities in the direction of electrification.
So a couple of things to discuss here. In terms of energy independence, security, blah, 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 I take the point. However, this transition was and will continue to occur with or without any geopolitical tensions, with or without the war in Ukraine, with or without any of these factors. Why do I say this? Because it was obvious, at least to some of us, unless you just want to claim we're completely deluded and coincidentally lucky and right, it's been obvious for a decade plus that this EV transition was happening. Again, if you guys are curious, look at some of the research from Rethink X and Tony Seba. This transition has been obvious. Some people didn't see it as obvious, including most legacy automotive manufacturers who will now be bankrupt as a result of not seeing it. But the justification here isn't, I was a little bit slow to realize this transition, this inevitable transition was in fact inevitable. The justification, now the world has changed now. No, this was obvious a decade or more ago. You just didn't see it. Let's go real simple here, okay? It's been known for a very long time. The cost of lithium-ion batteries is declining predictably over time. This was far and away, and today still is far and away, the most expensive thing in an electric vehicle. So let's think here. If we have a history of years, in fact, a couple of decades of consistent price declines on this core technology, the most expensive thing in an electric vehicle, and if we engage our brains and look into the future, follow that curve, that cost decline into the future and go, hang on a minute. EVs are way more expensive than ICE vehicles today, let's call it in 2010. Now in 2015, they're a little bit closer to, hang on a minute. In 2019, they're getting close to price parity. And remember, you can see the cost curve and go, wait a minute. I just realized something. In a few years' time, they're going to be even cheaper than ICE vehicles. You see, this is the thinking that didn't happen. I'm not trying to be rude or obnoxious here. I'm just trying to help people not make the same errors of not thinking in the future. Conjuring up a narrative that makes you feel like you're not as much of a moron, things have changed in the world now. It might make you feel good, but it can result in you repeating the same mistakes. It's not your fault if you didn't realize the transition was inevitable, but all the information was there. This was obvious to anyone who cared to look. I can come at this from another angle. Forget the lithium-ion batteries. This is so obvious that in and of itself, game, set, match. But if you look under the hood, literally, of an electric vehicle versus an ICE vehicle, there are about 420 quintillion different moving parts in an ICE vehicle. There's about 3 in an electric vehicle. And yes, I'm accentuating these points just a little bit. You don't need to be a genius to realize that all other things being equal, given the fact that the ICE vehicle, internal combustion engine vehicle, is a technology that's been around for more than a century. Many of the improvements that can occur have occurred. Many of the massive price declines and innovations in manufacturing have occurred. Yet an EV is a brand new technology with way less needs to go into it. You don't need to be a genius to realize that over time, there is enormous scope to reduce costs in producing electric vehicles. So not only do you have clear evidence that the cost of the most expensive thing is going to continue to plunge predictably over time, but you can also reason and go, hang on a minute. The cost to actually make these things, forgetting about the battery, which is a whole other thing, will also fall predictably over time. If you put these 2 and 2 together, you realize there comes an inflection point where the sticker price on an EV, spec for spec, that's equivalent or better to an ICE vehicle will actually be lower at some point in the future. First price parity, then lower, then significantly lower. This is not new, but some people still haven't quite figured it out. And for others, the penny has literally just dropped.
We're only 8% penetration globally of electric cars. That 8% penetration is going to expand probably at a CAGR of 30 to 40% over the next 5 to 10 years. Global governments are now all behind this, doing the things necessary, whether it's charging stations, whether it's new investments in battery technologies, battery mining. The Inflation Reduction Act, while horrifically named as a piece of legislation,
on this, we absolutely agree. Talk about gaslighting. As I've been repeatedly saying, this is the Inflation Induction Act. But again, I can't let Brad off here. The reasoning, the rationale, now governments are mandating this, that, and the other. That is true. But with or without these mandates, the transition was still happening and still inevitable. I've said before, all these government incentives, the mandates, the legislation, you're not allowed to make ICE vehicles after this date, completely unnecessary. This is a commercial inevitability. We don't need any help. It's happening regardless. By default, electric vehicles will and do have superior performance, superior safety, and over time, as I've stressed, will be significantly cheaper to not only own, but to operate, to maintain, versus an ICE vehicle. People don't seem to see this yet. That's why governments are pissing away such insane amount of money with EV incentives. Oh, buy an EV, get a discount. Now, don't get me wrong. As a Tesla investor, I'll take it. I'll take everything I can get. But these government mandates aren't doing a fucking thing except to force dumb-ass legacy automotive manufacturers in an EV direction who will still end up bankrupt anyway because they were already moving too slow. They're years too late. It's important to understand. Government incentives, irrelevant. The transition was, will, and continues to happen with or without them. Geopolitical issues, the same shit. I feel like Brad's in a bit of denial here, just trying to justify why he was completely and utterly fucking wrong, blind, and didn't actually think. I'm not trying to be rude here. I'm just trying to call a spade a spade. It sounds nice on paper. Well, hey, man, they were legitimately possibly maybe going bankrupt in 2019, 2020, but lots changed since then. All these government mandates and, people a bit more interested in energy independence. And for some strange reason, the cost of these batteries is a lot lower than it used to be. I don't know why that happened, but it did. So that's the thing as well.
Is a really potent piece of legislation to spur further development in energy storage and electrification. And when you look at Tesla, they have 30% margins. Their competitors are running 10% at best. And I think they have a compounding advantage in the world. So while we expect their share will stay at around 15% as we move forward, that's 15% in a massively growing market. And we think they're going to be a much larger percentage of the profit pool in electric vehicles, in energy storage, etc. And so much like Apple represents a huge portion of the profit pool and a smaller share of actual units sold, we think Tesla is following that playbook. They built a company that frankly is extending its moat and extending its lead versus the OEMs who are saddled with a bunch of ICE legacy.
Better late than never, but the key word is late. The points that you just heard, every single one of the points Brad just raised, I've said over the last 3 years. That's not because I just had the ideas 3 years ago. It's because I just started my YouTube channel about 3 years ago. I'm not trying to be an arrogant twat. Go look at me. I'm just trying to explain that this stuff was actually very clear and very obvious had you just done the thinking. But as I said earlier, if you're surrounded by a bunch of geniuses and they all think the same thing, it's very easy to just go, well, if they all think it's true, then it must be true. I don't need to think for myself. Next minute, you miss out on buying Tesla at around $15 per share in 2019. And now to cap things off, from a Tesla bear, ex-Tesla bear who's finally woken up, to a Tesla bear who's still soundly asleep, dreaming about the millions of dollars he and or she will make shorting Tesla because the stock's going to $100 per share. Let's head over to Seeking Alfalfa. So here we are. Let's read through some of the highlights on this brilliant, extremely intellectually rigorous article. Now, please, guys, before I get into this, don't hassle this guy, okay? Leave him the f*** alone, okay? He doesn't get it. Let it be. Don't try and find him on social media and bug him and tweet him and troll him. If he doesn't get it, he doesn't get it, okay? Adult's gonna adult. Leave the man in peace. Seriously. With that said, let's look through some highlights of this brilliantly titled article. Exploding EV competition. I mean, I couldn't have said it better myself. Remember, the competition is coming all over themselves. Could send Tesla under $100. Now, if I was a little more cynical, I might suggest that this will be a great way to get a lot of clicks on Seeking Alfalfa. Could, not will, could. Tesla's title as King of the EV Hill appears to be numbered in months. It's been more than 10 years of these idiots saying the competition is coming, one form or another. It's been more than a fucking decade, okay? Go fact check me. Search on Google, do a time-bound search. Look for some headlines, Tesla, competition, VW, Tesla killer, and so on. From a decade ago and more. But this time is different. By 2024, serious competition, especially on price and warranties. What the fuck, dude? What the fuck? This is one of the key points in the summary. Serious competition on warranties? The price thing is a whole other kettle. Let's not go there, but what? Oh my God. Will likely plummet company market share, because I also buy my vehicle based on the warranty. If Tesla is forced to slash prices to stay in business, as opposed to forced to raise them to avoid ridiculous wait times at this point in time, income will disappear and the stock price will suffer a dramatic decline over the next 18 to 24 months. I guess if that's true, Tesla's stock price would have something in common with Paul Frankie's reputation. Did I say that out loud? Seriously, guys, leave the guy alone. Okay? Be nice. Tesla may have a problem if competition in the electric vehicle space heats up dramatically. Okay. If competition heats up, not going to happen, my friend. Standard Tesla Model 3 autos are going for $45,000 and up today, and are the least expensive offering from the company. That buys you a rear drive only with a battery range of 270 miles. dual motor, all-wheel drive with 350 miles will cost you more than $50,000. This is true today. Hope he's going to talk about the margins underlying those and why the prices have been increased enormously over the last 18 months. But anyway, let's not jump the gun. Mushrooming competition. I tell you what, if the competition did do some mushrooming, I think they might figure out how to catch up to Tesla. Too bad that's not going to happen. Over the last week, Government Motors has been out marketing its Chevy Equinox EV model. It's true. Even the corrupt president of the United States has been deep-throating this thing. You did it, Mary. You employed union workers, whose votes I want, and it matters. I didn't say that out loud. The cost will be around $30,000 for a base setup, about the same as its brother SUV gas-powered Equinox option before considering environmental tax credits, blah, blah, blah. Yeah, here's the question, my friend. What will the gross automotive margins be on this $30,000 EV by Government Motors? Spoiler alert, it starts with a negative. But hey, let's not think about that. It hurts too much. Oh, are you serious? The guy's just putting a bunch of... Okay, cool. I have a feeling this article is just going to be a bunch of specs from the supposed competition. Hopefully not. Hopefully I'm wrong, but I'd much rather see some assessments of the businesses rather than the promised products and their promised specifications, ignoring the margins or lack thereof, ignoring ramping up production, ignoring Tesla's wait times, ignoring their software incompetence versus Tesla and so on. Let's just move on. Oh no. You know what? I'm going to skip ahead. I can see where this is going. There's going to be a gigantic list of all the competition, all the prices, and all the specs of all the alleged cars that are coming for Tesla rather than over themselves. Yep, scroll. Yep, I f***ing called it, didn't I? Look at this is a joke. This is the same the Toilet Boy's been saying, Mark Spiegel, for years. Look, here's a list of a bunch of cars that are coming out that are going to kill Tesla. Remember we talked earlier about not thinking deeply, oh, Tesla's going bankrupt. This is the same shit. Well, look, there's so many of these competing electric vehicles. Tesla's in trouble, obviously, because when they start selling these other vehicles, that means Tesla sells those vehicles. The end. Self-driving autonomous autos are the holy grail of big tech research and development efforts. Apple is working overtime to have a vehicle by 2025. They are working overtime. They've been working overtime for what? The last decade or so. We still haven't seen a thing. Yeah, that's right. The Apple car is coming for Tesla. It's been coming for a long time. Might be the world's longest orgasm, to be fair. But still has yet to arrive. Then we have the Alphabet/Google effort. Under development by its Waymo unit since 2014. So, the autonomous competition is also coming all over itself. Oh, here we go. This is going to be good. Tesla's looming financial problem. Too much fucking money and not knowing how to spend it all. Oh, sorry. Let's continue. I can't wait. I don't know. I haven't read this article yet. I can't wait to learn about this looming financial problem. I get the feeling we're about to hear some tinfoil hat shit. Battle for sales will revolve around 4 features in my mind: price, safety, warranties, and performance. I personally wouldn't quite describe these as the critical factors. Number 1 to me would actually be value. Number 2, price. Not the same thing as value. Performance/functionality. And we're not just talking about acceleration and range. No, we're talking about the software, the features, the infotainment, entertainment, and so on. The over-the-air updates, blah, 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 blah. And then 4th, safety. Now, who makes the safest vehicles ever tested today? Could someone remind me which company has literally the 4 safest vehicles ever tested? The S, X, 3, and Y? Could somebody please, which company already has literally made the 4 safest vehicles ever tested? Oh, that would be Tesla. So, based on these 4 features, it seems that Tesla has a grasp on safety. Now, as for price, we know for a fact, and we're not talking about sticker price, we're talking about price to manufacture. That's how you actually make money. It's not what you sell it for, it's how much it costs you to make it. And the difference between how much it costs you to make it and what you sell it for, that's called profit. That's the thing that matters, not the sticker price. As we know, a company can sell a product at a loss. Might be cheap for the consumer, but if they keep doing that, they go bankrupt because they're losing catastrophic amounts of money on every vehicle sold. We know Tesla has industry-leading profit margins by miles, and they're continuing to drive their costs down. They've been forced to raise their prices by up to 30+% on their vehicles over the last 18 months, just because demand is so insane. Tesla's already got a huge advantage in terms of price. They've got economies of scale. No one's catching up on price or safety. Now, what the fuck is... I can't believe this guy's serious, including warranties. He's got to be trolling, right? So let's just put that to the side. It's not even worth discussing. And as for performance, well, again, Tesla wins. Now, you might argue, well, doesn't the Lucid have longer range? Yes, but we have to factor in the cost versus the performance. What do I mean by this? If you're selling a car for $10 million, it's probably going to have better performance than any Tesla vehicle. You've got more money available to spend more money doing things that create insane performance that aren't cost effective or economical for mass market vehicles. Mass market vehicles are what matters. Tesla's price performance, and again, we're talking about price to manufacture, not what they're selling it for now, because that's completely irrelevant. Price performance, Tesla wins again. So I'm looking forward to learning about Tesla's looming financial problem as it relates to these 4 factors. Today, Tesla scores the strongest for safety and performance. Stellar third-party crash test results and ratings on top of some really cool driving features are the best-selling points for new purchasers. I disagree. It's a good point for some purchasers, but I think most people actually don't really give a about safety. They're not even thinking about that. Tesla does make the safest vehicles, but I don't think that's the primary reason most consumers are buying them. Although, at least in my opinion, safety over everything else. However, price is on the high side versus ramping competition that doesn't even exist and isn't even for sale and isn't profitable to actually produce. And old school networks of... I'm f***ing dead. I choked trying to read this the first time. And old school networks of dealership service sites all over the world for existing gas-powered automakers could become a huge problem, not for the automakers who have these burdens of dealerships, no, but for Tesla company growth and profitability. I'm really struggling to take this article seriously. I really am. I'm trying to give the guy a fair go, but it is really hard. If you can buy a car, truck, SUV with similar battery life and recharging mechanics at a lower price with adequate safety designs, adequate rather than superior, interesting. Man performance. I just learned a new word today, I think. Let me check. What is this? Historical. A man holding and cultivating a small landed estate. A freeholder. A servant in a royal or noble household, ranking between a sergeant and a groom, or a squire and a page. Sounds like a word a basement-dwelling adult virgin would use. Not that I'm suggesting that, I'm just... Never heard that one. Did anyone else just encounter this word for the very first time, or is it just me? And human performance capability and smarter warranty cover. Fucking hell, dude. What are you... This guy's an idiot. What the f***? Most all consumers will opt to buy EVs not produced by Tesla. Is there any way I can short this guy? I would definitely short this guy. The cost crossover from gasoline to EV buying logic has arrived into 2023 for American buyers. Okay, great. So he understands price parity. That's good. For clean emissions autos assembled, tax credits, blah, 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 blah. Effectively, the price to purchase many new vehicles powered solely by electric and battery storage is now lower upfront than traditional autos with fossil fuel burning engines. This is an important point. So, if that's true, wouldn't it be great to be a company who's already producing highly profitable electric vehicles at scale? You'll benefit even more. And back to the looming financial problem. Yes, you will have a looming financial problem. Printing many, many, many billions of dollars of additional unnecessary profits per quarter. Tough life. So I guess, who's right. Tesla does have a looming financial problem. I called it. Too much money. Not enough things to spend it on. So I'll give him that point, even though that wasn't his meaning. So, at least the guy gets price parity, lower cost to own and maintain. Great. EV adoption is happening. We're going to skip ahead a little bit. This is killing me. While competition is great for consumers, it is horrible news for a company holding a huge share of this market. Tesla's dominance could easily be ending in 18 to 24 months, especially as a variety of new EV entrants will probably turn into trendy hits with buyers. Some wishy-washy language here. Probably. Could easily be ending. I don't think this guy actually believes it. I just think he's trying to get clicks. Really lacks conviction. Let's read this again. Let's dissect this. This matters. Tesla's dominance could easily be ending. Does that sound like somebody that's got confidence that it will be ending, or that it could theoretically, hypothetically, possibly, in some version of the simulation, maybe be ending? Especially as a variety of new EV entrants will probably turn into trendy hits with buyers. Again, strong conviction, bro. I don't think you even believe this. I just think you want clicks, which is working. I'm covering this, so hey, job well done. In the end, both Volkswagen and GM believe they will be selling more EV cars than... Bruh, sorry to rain on your parade here, but Mary B. Aspara doesn't believe that GM will be selling more vehicles than Tesla anyway. She says they will be, but she doesn't believe it. She won't answer a direct question. GM's planning, I think in 26, to be selling 1 million electric vehicles per year in the US. Just because a company tells you they're going to do something doesn't mean it's true. Doesn't even mean that they'll achieve what they tell you they're planning to do. So Tesla could very well quickly fall from the number one seller worldwide to number 3 or lower in the not too distant future. Mr. Wishy-Washy, I'll tell you what, man. I bet this guy has a hard time with women. Hey, what's your favorite color? It's blue, baby. And she says, well, actually, I like red. And he says, well, I probably could, actually, yeah, red's my favorite color too. The guy's just got no conviction. Doesn't really believe anything. He's just kind of, maybe this might... At least that's my interpretation. The only way the company may be able to stick around is through the offering of lower priced, lower margin vehicle designs. Sorry, but we got to talk about the brain damage in these comments. Here's a question, ladies and gentlemen. Is it possible that Tesla could introduce a vehicle in the future for a lower price point, yet maintain equivalent margins versus today? Is it possible? If you're a Tesla short seller, no. And if your brain works, yes. How? They can continue to drive their costs down. Can you imagine that? Continuing to drive their costs down means their cost to produce vehicles becomes lower, means they can introduce vehicles at lower prices and still maintain the same margins. What a crazy idea. I know it's fucking crazy, pretty out there, huh? This is just so fucking dumb. Let me rephrase this. One of the ways the companies may be able to stick around is to blah, blah, blah. Another way the company may continue to dominate the entire industry is to continue to, as they've been doing, drive their costs down, have the lowest cost to produce compelling EVs of anyone on Earth, and continue to sell them at whatever price the market deems is necessary while maintaining industry-leading margins. 2021 to 2022, peak price and investor optimism? Question mark. So, does an auto industry record $950 billion in equity market capitalization make sense in September 2022? Tesla really... Oh, fucking hell, dude. It hurts. We're doing this again, aren't we? Is Tesla really worth more than the rest of the world's auto industry combined? You mean the rest of the world's horse and carriage manufacturers, just as the automobile was introduced? The companies that are destined for bankruptcy, that face an enormous challenge surviving the decade, that don't have any compelling mass-produced, highly profitable vehicles available today, that are attempting to catch up to one of the fastest moving, most innovative companies of all time? My answers are no. Plenty of risk is now part of the shareholder proposition. Perhaps far greater downside than was baked into the investment equation a year or two ago. Can you believe this fucking clown? Implying that there's more risk in Tesla today, their market cap today, than it was a couple of years ago. Is this an awkward time to point out I was buying Tesla stock for $15 per share a couple of years ago? I can't. Let's move on. I just fucking can't. The market cap capital. Here we go. It's a bunch of financial comparisons against dinosaurs versus Tesla. Chalk and cheese. Whether shareholders like it or not, we are entering a new era of intense competition. Okay, if you say so. But that's not all the bearish news. Rising interest rates and a slowing economy may have high-pointed Tesla's valuation during January to February 2021, around the time of maximum meme stock frenzy buying on Wall Street. My biggest concern is... I keep joking. My biggest concern is Tesla's profit margins are peaking. Competition will dramatically change the pricing outlook for electric vehicles. Potentially, again, potentially, I love how he's just really on the potentially dragging operating results closer to break even or into lost territory a few years out. That's right. Einstein here, gently sort of saying without saying, because he's a bitch, he doesn't actually want to commit to anything. Maybe it's possible, theoretically, hypothetically, that Tesla might start breaking even and then losing money in a few years' time because of competition. Now, in fairness, it's up to Tesla where they maintain their margins. At this point in time, their margins are absolutely fucking absurd. They're too high. They're embarrassingly high. Their prices are embarrassingly high. Elon has said literally this. It's not their fault their margins are so high. They want their prices to come down and they want their margins to come down. But they don't need to at this point in time. Tesla's trying to keep prices in line with demand so wait times aren't too absurd. But this is a point. Let's say Tesla decides, you know what? We only ever want to have about a 30% profit margin. They can keep that. They can keep driving their costs down. And that just means the price of their vehicles comes down and they maintain a steady margin. So this could be a fair point. Not that Tesla's going to start breaking even and losing money, but they may actually be around that 30% margin indefinitely. It depends what they want to do and what the market dictates. Problematic trading pattern. I have written several articles critical of Tesla over the past year on seeking alfalfa, and I'm growing more bearish now. While price peaked in early November around 414, split adjusted, with other big tech names, upside buying momentum has been methodical. If you want to have a circle jerk and technically analyze Tesla's stock price, pause the video, grab some Kleenex or whatever and go for your fucking life. I'm not a big fan of astrology for stocks. Let's move on. Oh God, here we go. Some more. I love every time I shit on technical analysis, there's always somebody in the comments who tries to explain to me why it... And I understand the self-fulfilling prophecy argument, but... I haven't come across a reasonable point in this article yet. Not even one. I mean, that's kind of rough. I must be a deluded Tesla fanboy, right? Don't laugh. Sorry, bro. Cry maybe if you're a shareholder. I certainly will be crying all the way to a fucking $10 trillion market cap and then some. But a Tesla price under 100 per share could be reality in 18 to 24 months. Such would still place the company as the most valuable automaker by market cap. However, it will push the price into a more normal valuation zone versus the rising and likely successful tide of EV competition approaching fast. Bro, this guy's higher than I am. I love this pathetic wishy-washy likely success, dude. Grow some balls. How could this bearish forecast end up being wrong? Now, this will be interesting. This question revolves around consumer demand and Tesla's reputation. If buyers believe owning the brand, here we go. Let's ignore Tesla's manufacturing advantage, their economies of scale, their engineering leaders. I mean, they've literally got the A team, the elite team of engineers. Let's ignore their track record. Let's ignore their software capabilities. Let's ignore their autonomous. Let's ignore literally everything except their brand name. Because the only thing that matters is the brand name. That's why people buy a Tesla, because of the brand name. Let's read on. If buyers believe owning the brand name is more important than the best value, the safest, the best performing, if consumers believe that owning the brand name is more important than the things that actually matter, then pocketbook issues, selling cars over $50,000 may remain a profitable and growing venture for the company, albeit at lower rates than the recent past of near monopoly market share status. My worry is cars with lower costs and comparable operating performance will be more desirable for the masses. With about 30 EV options today in the US, He's not about to own himself and suggest there's already 30 EVs, but Tesla dominates. So therefore, when there's more than 30 EVs, Tesla's not going to dominate. I hope not. With about 30 EV options available today in the US, with prices under Tesla's lowest dollar cost model, yet no one's buying them. Hello, no one's buying them. Hello. Likely more than 50 by 2024, because if no one's buying 30, then they'll definitely be buying 50. And as many as 150 models by the 20 plus automakers in 2026. By my count, including smaller EV startups like Rivian, continued dominance of the sector is no longer guaranteed. He's done it again. Better warranties and service options, maybe even stronger safety features could torpedo Tesla sales. Again, could. I mean, wishy-washy. If the company is forced to lower prices to keep some legitimacy in the EV market, profits and cash flow could be crushed by 2025. Can somebody remind me in 2025 to come back and compare Tesla's profits, cash flow today? Let's call it for the full year 2022, the full year 25. So set a reminder for early 2026, maybe January, February. At that point, investors may not want to own shares anywhere near the same bubble proportions and excitement in portfolio construction as 2021 to 2022. In other words, it could be tough sledding for both Tesla and its investors by the end of 2023. Smart investors definitely aren't paying attention to what I'm saying. Oh, wait, did I say that? That's so rude. I would never say that. Smart investors may see the writing on the wall and decide to sell shares now before competitive forces drive growth into the ground. Please let me know in the comments below if you're selling your Tesla shares now because you're a smart investor and you see the imminent financial problems that Tesla are about to have as a result of the impending competition. Oh, he's done it. Please, again, remind me to roast. Come back every year. This is going to be great. I am moving my rating from hold to sell, and with it, burying my reputation. The Tesla bubble. Well, here we go. The bubble. That's right. It's a bubble. It's a bubble. It's a bubble. I don't understand it. It's a bubble. The Tesla bubble may finally be popping. The question I have for existing owners, that would be me, I can answer this question, is what is your pain threshold? If you are not willing to sell now, just for the record, I'm not, never sold a share, and no fucking plans anytime soon. If you are not willing to sell now, you need to draw up some red lines that will convince you to exit. A lower stock quote? Is that a potential reason you would sell a low? Huh? Sales earnings misses from sky highs. He thinks the analysts are too high for 23. Bro, you're too high. Less risky growth stories can be found on Wall Street. I can't wait for him to name them because, you know, if you're a guy who's got some conviction and courage behind your statements, if you're recommending people sell Tesla, if you're literally saying without doubt, that's pretty strong conviction. Without doubt, there's better opportunity. Well, if there's no doubt, then surely you're willing to share them. I hope he does. Without doubt, less risky growth stories can be found on Wall Street. Many with valuations similar to the S&P 500. Why not focus on them with your investment capital? Good question. Can you please give us a list of them so I can sell my Tesla stock and buy them instead? Oh, here we go. Great. He's got them. He's listed some. This is fantastic. How far and fast could Tesla's share price fall? I love this could. Well, I warned a few years ago in my articles about the intense competition coming to online streaming services with avoid and sell ratings on Netflix and Disney. From last year's highs, hang on a minute. He's saying he warned a few years ago. Shouldn't we be looking at the price of those stocks a few years ago, not from last year's highs? This isn't cherry picking in one's favor, is it? Surely he wouldn't be doing that. From last year's highs, to make myself look good, Netflix fell as much as 75% over 6 months and Disney 55% over 14 months. In a similar vein, and perhaps from a more overvalued position, projecting a Tesla decline of 75% from November's all-time high gets you close to $100 per share in the first half of 2023. What a fucking pussy! Don't say it cannot happen, as opposed to don't say I didn't warn you. I mean, bro, I just can't. I can't believe that in 2022, there are still people today, publicly, self-immolating, claiming that the competition is coming, although doing so like a gigantic fucking pussy with no nuts. Maybe it'll come, might happen, could possibly. I just don't understand. Do these people genuinely believe what they're saying? Do they half believe it? Are they just trying to get clicks? Do they understand they're going to be roasting them for the next decade and a half straight? Now, I forgot what this guy's name was, but again, please don't hassle him, okay? Just let it be. Adult's gonna adult. You're not going to get through. So the question might be, well, why would I create this video then debunking these ridiculous points? And that is because there are still people today who read these articles on Seeking Alfalfa and think, oh, that guy's got a point. Look at all those pictures of those vehicles that are coming with all those specs that are going to kill Tesla. Good point. I'm really trying to reach them and maybe entertain a few other folks along the way. And look, I don't want to be mean or unfair here. I'm an equal opportunity roaster here. So let's all play along. Let me know in the comments below. What's something you were completely and utterly dead fucking wrong about? Let me know in the comments below. We all make mistakes. We all have bad beliefs. We all believe dumb shit sometimes. I'll get the ball rolling. I used to think that God existed. It's very embarrassing to admit that, but it's true. And now it's your turn. What's something that you were adamant about or really strongly believed in the past and it turns out you're completely wrong? It's great to be able to admit our mistakes. And lastly, after you're done praying for me and hoping that I'll avoid burning in hell for the rest of my life for saying things about God not existing, thanks for tuning in. I hope you enjoyed the video. You can support the channel by joining Patreon with the card in the corner or the link at the pinned comment. You'll instantly unlock well over 100 exclusive videos and instant up-to-date access to my Tesla stock price targets out over the next decade. And for the record, I'm just a little bit above $100 per share in the next 18 to 24 months, just slightly. See you over on Patreon. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you want to support the channel and instantly unlock over 100 exclusive videos, plus my 10-year Tesla stock price targets and loads of other perks, including optional access to my Tesla valuation model, join our growing community of thousands of supporters on Patreon with the link in the pinned comment. You can also pick up some Tesla, Elon, and investment-themed merch in the merch store. And if you're still watching, you're awesome. Please let me know your thoughts on today's video in the comments below, and click the card on screen now to watch the next video.